All right, let's get right into it. We're going to talk about the housing market, but probably not in the way you're used to. Today, we're pulling back the curtain on the real truth about what's coming in 2026.
It's the first thing everybody brings up, right? The news, your friends, that expert you follow online, they all point to one single thing: interest rates. It's just become the accepted wisdom.
And honestly, that's exactly why most people are going to be completely wrong about where the market is headed. Because if you are only watching interest rates, you are absolutely looking in the wrong direction. So if it's not just about the rates, then what is it? Well, the real engine behind all of this isn't some number that the Fed puts out. Nope, it's something way more powerful and, a lot more unpredictable. It's human behavior.
To really understand where we're going, we first have to get a solid grasp on where we are right now. And, the best way to describe the current market is what I'm calling the Great Housing Freeze. I mean, think about it. The entire market is basically in a staring contest. Buyers are on the sidelines just waiting for rates to drop. Sellers, they're holding off because they don't want to give up their crazy low mortgage rates. So everyone is just stuck, watching and waiting. And here's the thing you got to remember. Markets almost never move when everyone expects them to. The really big shifts, they happen when that collective waiting game suddenly shatters, when the dam of expectations finally breaks and everyone is forced to make a move. So, how does that waiting game actually break? Well, that brings us to the absolute core of the issue, the one thing that most people just completely underestimate, and that is the real supply problem.
And this right here, this explains everything. You've got millions and millions of homeowners who are essentially locked into these amazing, ultra-low mortgage rates from a few years back. Just look at that difference. Selling your home would mean trading a low, super affordable payment for one that's way, way higher, even if you bought a similar house. They're wearing golden handcuffs. Why on earth would they sell?
This is why we have to completely rewire how we think about interest rates. They are not an on-off switch. Their real power is psychological. It's all about confidence. The market doesn't just magically restart when rates hit some perfect number. It restarts when enough people, buyers and sellers, finally accept the current situation as the new normal.
Let me tell you a quick story because it perfectly captures this whole thing. So imagine a family, right? They're waiting and waiting for rates to fall before they buy. But the big crash they're expecting, it never happens because inventory is just so tight. Then, one day, rates dip, just a little bit. And suddenly, bam, that's the signal. But it's not just a signal for them. It's a signal for thousands of other waiting buyers who all flood the market at the exact same time.
Okay, so knowing all of that, what does it actually mean for 2026? Let's break down the two most likely ways this could all play out.
So in scenario one, rates slowly start to come down. What happens? Buyers rush back in. But, and this is key, because of those golden handcuffs, inventory stays tight. The result? Prices kind of go flat, but they don't fall. Now, look at scenario two. Rates stay high. This means fewer sales happen, sure, but supply also stays incredibly restricted. And the result is, well, it's pretty much the same. Prices stagnate, but they don't crash.
You see the pattern here, right? The common thread is that neither of these very different paths leads to that huge dramatic collapse so many people are waiting for. The market seems to be set up for frustration and confusion. Not a boom, but not a bust either.
So if we're probably heading for a period of stagnation and confusion, what's the right move? This brings us to probably the most important mindset shift you can make. If you can't predict the market, you have to focus on positioning yourself within it.
Just look at the difference here. The losing strategy is all about prediction, waiting for the absolute perfect moment, chasing that feeling of certainty. But people who do that, they almost always jump in late, right when competition is peaking. The winning strategy is all about being ready. It's about understanding these cycles and making a decision that's right for your personal life, not trying to perfectly time the entire global economy.
And of course, I have to say, this is not financial advice. Nobody can predict the future with 100% accuracy. But what history shows us again and again is that making a decision based on panic or emotion almost always costs you way more than just buying or selling at a slightly imperfect time.
So what's the final word on 2026? Look, it's not going to be obvious. The market isn't going to be screaming buy now or sell now. It's probably going to feel uncomfortable, confusing, maybe even a little boring. And the real secret is that those are precisely the conditions where the biggest opportunities quietly show up for the people who are actually prepared. So the real question is, will you be positioned to see them?